In this video, I'm going to walk you through how I made a $30,000 profit, 100% return in a little over 30 days. In fact, it was 36 days. I'm going to walk you through the trade, the chart, what I was seeing with technical analysis, what strike price of the option I bought, what price I got in at, and what was the stock doing on the chart, and what price I got out at to create a $30,000 return. Not percent. $30,000, 100% return. Let's get into the video. All right, so let's dive into the chart and let's dive into the trade that created $30,000 profit. Now, if you like these type of videos, I want to say right now, give me a thumbs up because I stopped doing these profit loss videos because I wasn't sure if it came off as bragging or if it came off as more helpful, which is what we're really trying to do, which is help people and share some of the technical analysis and things that we do inside of Power Trades University. So let's take a look at the chart. The stock that we're looking at is ticker symbol BYND, which is Beyond Meat. So we posted this in the forum for our members on what's called our trade tracker when we analyze the pattern. So let's talk about the pattern that we're seeing here. First, you can tell that Beyond Meat has a channel, but there's really two channels if you look closely. There's a channel from about 115 up to 200. And then there's another channel within the channel that goes from about 115 to 160. And the way I like to look at these two different channels is if you're going to play the bigger channel from 115 to 200, you have to give yourself more time for it to get back up there and for it to be right. So for all purposes of swing trading and getting in and getting out, we were playing the smaller channel here. So we were looking at the stock going from 115 up to 116. So let's talk about the day that we entered the trade. So we entered the trade on May 25th. If you look at the chart on May 25th, we saw that the stock maybe about a week before that had broke down below support. And so what we shared with our members inside of the university was once the stock closes back above support, which is around the 115 level, we would be willing to take a position, assuming what we like to call the predictable, repeatable pattern would repeat itself and the stock would channel right back up to at least 160. So our entry date was right there on May 25th. That was literally like the first day that it closed back above 115. So we got into the trade at 115. Now the strike price that we looked at for the option was the 100 strike price option. So we bought the 100 strike price option. And at that time, the 100 strike price option was going for $29. So if the stock was at 115 and we bought the 100 strike price, it was $15 in the money and we paid an additional $14 for time, which gave us the total price of $29 for that 100 strike price option. All right. Now, as you can see, when we sold the stock, we actually sold the stock on June 29th. So again, a little bit over 30 days later, we sold the stock or we sold the option. And we were able to get out of that option at $59.50. So $59.50 is what we sold the option at, which ended up being a 100% return. So I bought $30,000 worth of options and I was able to pull $30,000 right back out in pure profit. So 60,000 total, but 30,000 of it was profit. When you look at the chart and you look at what the stock was doing around June 29th, you can see that it had ran right back up to the level that we thought it could hit, which was 160. Now, at this point, we had a decision to make, and this was where most traders make a mistake. Most traders will say, I'm going to keep the stock. Let me see how much higher it can go. Well, we already knew that we were playing the shorter channel, and so it wasn't a time to risk more money by seeing if it can go up higher. In fact, if you would have stayed in the trade to see how high it can go, you can see a few days later, it actually turned around and started to sell off. So if you didn't get out, you would have given back some of your profit. So we closed the trade out because we saw it hit the 160 level, number one. And then we saw it started to kind of pause or find a ceiling that it couldn't break through. Now you could look at that and say, oh, perhaps it's a bull flag pattern. But remember, the option we bought, we didn't buy enough time to sit through another pullback and then hopefully see it come back up and then eventually break through and try to get to the $200 level. It hit our price point. We played the smaller channel for 115 to 160. Once it hit 160, it's time to do what real traders do, which is bring the troops home, secure the bag, send the money back out. And so it hit 160, we closed out the trade, we brought home 100% profit, $30,000, generated $30,000 in a little over 30 days. What's cool about this is that anybody can do this if they, one, learn how to read the chart, number two, determine the best time to buy and sell, and number three, determine the best option is from a strike price standpoint as well as an expiration date that'll allow you to participate in the trade and give you some breathing room in case something goes wrong. If you like this type of analysis, this type of trading, this type of risk reward ratio, this is the stuff that we teach inside of Power Trades University. And again, you can see right here, we can put a screenshot in here where we actually walked our members through this. Beyond Meat, I like it. It's back in the strike zone. I think there's a huge opportunity for Beyond Meat. I think in 6 months, you're gonna wish you own some or own some shares. So thanks for watching. Give the video a thumbs up, leave a comment below, hit the subscribe button, and I'll see you on the next one.